afternoon, this Thursday, May 6th. Explosion today, same culprit. It's the Brazilian corn market that is just falling to pieces. Now some are trying to dial it down to 90 million metric tons. I can't wait to see the USDA wiggle and move and play musical chairs next week, Wednesday at 11 o'clock when they do our supply-demand numbers domestically and also for Brazil. What are they going to come up with? Well, this is the reason why corn's exploding, and new crop corn is exploding over 6 on the wake-up call that, you know what, if you can't get the corn bought out of Brazil because of the tightened supplies, they're going to have to come to the U.S. in September. And it's pushing up our December corn probably much even higher than I thought this early in the game. But why not? We're going to run through a series of checks and balances on the charts and ask the question, why will futures not make new all-time highs for corn and soybeans when you consider not only is it a supply problem, a demand oversurge, and a liquidity issue, the fact that so much money is pumped out there, why do we not? Let's walk through some charts and talk about this. First, let's go look at Brazil, the safrinha corn crop I have highlighted here for you. Absolutely no rain through May 14th, and even the longer-term models aren't suggesting much beyond that for a few days. Well, pollination is done by that time, and so it can rain all at once in that window. It really isn't going to change much other than stabilize the imploding crop potential. So moving on to spring wheat today, pushing to new contract highs again, while Chicago and Kansas City are still well below last week's highs as the spreads are now finally working for Minneapolis wheat over the last week, implying there's a problem. This here chart highlights the drought. The red here is the drought, and notice how all of the spring wheat area, almost 82% of it, is in the drought. And here's the area in 2017 that bailed out the wheat market, is this area grew a great crop. It rained. Well, even there, caught in the drought. Remember, dark green doesn't mean it's raining. Dark green means that's where the prominent acreage is at. Only spot in Idaho where they're probably having heyday, but even out in Washington, spring wheat's in trouble. So this is an issue that is now finally being focused on, kind of like the Brazilian drought as well as being focused on in the corn market. And if we look at the rain that the GFS, which is not the very accurate one, has coming up this weekend, they're even showing only in western parts of North Dakota. This is the cutoff I had. Shows Bismarck maybe 30 hundredths, 60 hundredths in the west. Maybe Pierce, South Dakota, they only grew a lot of wheat there. This is mostly pasture out here because the spring wheat acres dominate here in western North Dakota. A lot of pasture, but mostly acreage in here where we can catch some wheat. Sorry I don't have Montana in here, but again, Montana does catch some, but the bulk of the spring wheat belt does miss out. So what has this done? Well, unlike Chicago wheat and Kansas City wheat that peaked here and fell off and now they're crawling back, spring wheat is pressing new highs. And when we look at it in the context of the monthly chart, we're just getting warmed up. And we look at this, and at minimum, I expect this 868 2017 high is going to be hit. It's the actual damage when we get into June, losing to actual production at whatever comes out of the ground sends us to $11. And another reason why we're going to 11, I think, ultimately, is when we do this Fibonacci stuff like I've done for corn and I've done for beans. We always talked about the 618 and then the 786. Well, here too, bear markets, minimum bear market bounces go to 25%. Do we dare say that wheat's in a bear market? Can we say it's in a bear market with corn and protein exploding? 25% retracement is 850. Why will we not challenge this number? Earlier this week, the video on Tuesday implied there was a prospect that we could stall out into the 15th and then take off. But all bets are off. The market is just crazy upside, money flowing in now. There's nothing breaking this market. Not even a forecast of rain for this weekend gets the wheat market down. It's closing at new contract highs going into rain. So the bottom line is, I think we're heading to the 38% retracement. That's our target zone, which is just under the 1120 all-time high. And if we have a disastrous 1988, I said if. I didn't say we will. If we have a disastrous 1988 with multiple days on end, something like 20 days that are over 100 degrees during the month of June, well, then we could be talking, the $12 to $14 mark. This $20, I know some people are saying with liquidity, has a potential of we could go there. I'm not saying we can't, we won't. I'm just saying that the Minneapolis wheat should have never went to $20. It's because the Minneapolis Grain Exchange mucked it up. They should have released limits a lot sooner. They were 30-cent limits every day, and people just couldn't get out. So while Kansas City wheat stalled out at $14 and Chicago at $14, Minneapolis should have ran out of gas at $16 to $17. But because people couldn't physically get out and the exchange was too slow to raise the limits until we finally got here, Well, of course we traded at $20. So really, is it an actual high? I think logistically, worst case scenario is maybe spring wheat goes to $14, something like that, a 618 retracement of this number. We'll see. I just know I don't think we're done here. I don't think we're done here. This is a speed bump. But then I don't know the weather. I don't know if God's got rain planned after Memorial Day weekend. If he does, well, then this is it. But I think we're going to get there before that happens. As we take this conversation of all-time highs onto corn, here's July, finally made it to 786 that we've been broadcasting for so long. But why would we not take out all these prior highs and score something near $9? Maybe the futures goes to $8.60, $8.90, while cash goes well over to $9 on this extreme liquidity and shortfall in production around the world, along with the heightened new demand. Soybeans, daily contract. Old crop July had not made new contract highs yet, like the November contract did last night and all day today. It's under the influence of the first of the month high, but maybe it doesn't do it. If we roll through, we're obviously here at the 786 July contract. Obviously, May got to 1609. But why would we not also ultimately, if we've got corn blowing higher, protein moving up, why not take out these previous highs and go to $18, $19? I didn't even say there's a drought in the Midwest. I'm just saying the demand run can possibly do all of this. Here's the joke of what's going on. With all the liquidity that we have that was created, and it's more liquidity coming that the government wants to pump out there with the new plans under the Biden administration, gold can barely get to a 38% retracement. And I said in yesterday's newsletter, I guess, maybe we're going up into the 10th to 1830. This thing should be up here. If it was anything like cryptos, it would be into the sky, but it's not. Gold is manipulated by JP Morgan, Morgan Stanley, and the banks that do the bidding for the Federal Reserve to make you think there's not inflation out there. So anyway, I bring this up as attention. Someday gold may go. I'm just not holding my breath. Silver, this is the bigger joke. I own gold and silver from back in 2008, 2009. I ended up buying all my physical supply of silver. I paid about $12 for it. I own my gold from about $850 to $900. Basically, that all peaked out back in 2013. And in silver, we're $25 or $23 off the all-time highs of $50 in 2011. And gold is still well off the highs that we made back in 2011. I'm not making any money on my gold and silver. And there's these people on TV telling you to buy gold and silver. I'm still sticking with my cryptos. Just wanted to show you this chart, how ridiculous it is. We need to get through 30 and head to $50 if gold and silver are truly a warehouse of the dollar debasement. So there you have it. A little frustration on the metal side. I'm glad I own my cryptos. You're welcome to call and ask which ones to do because we're going to start following them here on my website. Bitcoin's the preferred, but Ethereum is the new hot one to buy. But be careful. They've already front-loaded. They're doing what the government's doing. As we get new government programs and Biden has another $2 trillion this, $2 trillion that, you're just going to see the cryptos continue to push higher as they are reflecting the debasement of the U.S. dollar, which, by the way, flows back into the grains and this liquidity that we have pumping us up, likely going to take corn and soybeans to ultimately new all-time highs. Maybe that's July 4th. We'll see. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.